Welcome back to Learn Accounting Podcast. This is episode 3, Control Accounts, Credit Balance in the Sales Ledger Control Account. So, the opening balance in the Sales Ledger Control Account, as we've seen, is normally on the debit side. So from the first podcast, that's the normal state of play, would show the opening debtors for the period, for this accounting period. It is possible for individual credit customer, which is a debtor, to end up with a credit balance. So this could be one debtor account or several, but it's highly unlikely for it to be all debtors. But certainly some debtors' accounts could end up with a credit balance. So first of all, what does this mean? What does a credit balance in a debtor account mean? Let's just go through some key points for that. Firstly, a balance BD in a debtor account would therefore be on the credit side. Okay, that's what it means. So credit balance, obviously credit side. Instead of money being owed by a debtor, so that means normally a debtor owes the business money, but that is shown by a balance BD on the debit side. So instead of money being owed by a debtor, money is owed by the business to the debtor. So it's through obviously the reversal. So money is now owed to a debtor when there is a credit balance on a debtor account. The debtor account shows a balance BD on the credit side instead of a debit of the debit side. Okay, that's for an individual debtor account. Maybe one account or maybe several. It's unlikely, again, it's very unlikely to be all of them. Lastly, indicating a liability by the business to the debtor. So again, liabilities, a credit balance on a ledger account indicates a liability. A debit balance for a debtor account indicates an asset. We own the money that's about to be given to us by the debtor. So we owe that money. So we've got here a change, an opposite effect, haven't we? So let's look at this in an example. You might want to pause the video at this point in time and copy down the question. It's a brief question, but you need to obviously to relate the information to the answer on the next page. So I've got Professor Accounting, that's myself. I sell £700 of goods to J. Taylor, and I've got dates which obviously just follow in sequence, but I'm not going to use dates in the answer. To J. Taylor, so it's a sale £700. Or later in the month of April, J. Taylor pays for those goods, sending a cheque for £700, and then later in the same month, J. Taylor return £250 of goods as they are unsuitable. So that's the information that I'm giving. Let's look at this in the ledgers, how we would produce the ledger accounts for this, and mainly indicate this credit balance, how it can happen. You might want to look at the transactions, or try and think ahead if you want, as to these transactions, how this might affect the ledgers, just as we go into it, maybe you're actually copying it down. Okay, let's, so again, as I said, pause it if you need to, I'll just continue. Here is obviously an example. Here is the J. Taylor debtor ledger, very straightforward, simple, with your T account. So there is the £700 recording of the sale. So sales, a sale to a debtor, the double entry for that, if you want to think about that, would be debit the debtor account, which we've done. Debit means to write on the debit side, the left side, and we're crediting the sales. So I'm not showing you the sales account, don't need to, but that's where the credit entry would be. So it's £700 of sales. The second entry is to record in date order. Look at the question. The payment was next. So J. Taylor has successfully paid in full the full amount for the sale due in April. So it's £700 paid. Wasn't indicated by cheque, but after you use bank, you could use cashbook as well. So that was the sale. We're then told that J. Taylor returns goods. So that entry for returning goods, if I think ahead if you wish, if your J. Taylor is a debtor is returning goods, then is that going to decrease debtors or increase debtors? There we go. Who was right? Sales returns. We make a credit entry in the debtor account because when you return goods as a sales returns, debtors returning goods, that means that stock is given back to the business, so the amount the debtor owes is reduced. So credit entry, reduction of an asset, reduction of a debtor, that is a credit entry. So that's £250. So we're now at the end of April. We tend to balance off the accounts at the end of the month. In this case, it might be the end of the year, depending on the financial year or the accounting year. So we're going to balance off the account, and as you can see, I've already done the totals. The bigger side is the larger side in balancing off, which is a skill that needs to be certainly mastered at AS, balancing off the accounts. We always balance off the larger side. So the bigger side clearly is the credit side, which is £950. We move the total over to the other opposite side, which is the debit side, and then we simply take the total away from the value or values above that. In this case, it's £700. So the difference is £250. So that difference is the balance carried down, and that therefore would be the balance BD for the next period. Now, what do you notice? You notice there that there is a balance BD on the credit side of a debtor account. But in most debtor accounts, nearly all of the debtor accounts, except in this rare situation, balance BDs at the start of a period belong to are typically on the debit side of a debtor account, because that means debtors owe business money. So this is a scenario where a debt balance could start from a balance B, if J Taylor had bought previously and owed money previously. In this case, it wasn't meant. But how it can go from transactions during a period to ending up having a balance BD at the end of balance CD at the end of 1 year for a balance BD at the start of the next year. So what does this now mean? Just to clarify what this means, a balance BD on the credit side of a debtor account now means what? It means that £250 of value of money, the business now owes J Taylor. So why does the business owe J Taylor £250? Well, just look at the transactions above. J Taylor bought goods for £200. J Taylor paid for those goods, but then J Taylor returned £250 of goods. So that therefore means the business has to reimburse, refund in some way, maybe an account credit, providing an allowance on an account, or a physical payment back, depending on the situation. But as far as the ledger shows, you need to be able to spot this situation, especially when there was, I previously mentioned the structure of the pro forma of the ledgers, a balance BD there. That indicates that the business owes J Taylor £250, not that J Taylor owes the business £250. So, as I just said there, to summarise, J Taylor now has a credit balance on the account. When we draw up control accounts, this is shown as a separate balance BD on the credit side. So I refer you back to the pro forma podcast, and if this was the only debtor value, therefore, in a particular question, that this would be the balance BD small amount that I've referred to, which will go into the control account on the credit side of the account. Well, I want to thank you for stopping by and watching this podcast. Again, here's my email address and relevant information. I look forward to seeing you again on YouTube. Thank you.